The British pound touches a record low against the dollar as investors make known their displeasure over London's big spending plans. Even a reassurance by the Bank of England hasn't helped. It's been a volatile year for currencies. Ask anyone holding yen, rubles, or euros, even bitcoins. But that's not the value of a cryptocurrency that you're about to see here. It's the British pound, which fell Monday to a record low against the dollar. It's the market reaction to the so-called mini-budget put forward by the new Conservative government at the end of last week, which included some of the biggest tax cuts in 50 years. Now, investors are not happy, and that's pushing up the cost of government borrowing to recent highs. Now, the Bank of England even weighed in, saying it's monitoring the developments in the financial market and would not hesitate to change interest rates by as much as needed. But even those remarks haven't taken pressure off of the pounds. Now, public opinion in the UK has meanwhile been divided. There's widespread concern over inflation and the rising costs of living. But whether tax cuts will bring about a change of fortunes for average Brits, as Conservatives promise, has been met with skepticism. On the streets of the City of London, Britain's financial centre, the plummeting pound is a cause for concern about what the coming months might bring.
This is the problem, right? You take a Labour government would go down the spending route. Does that actually generate growth? Does that take us a recession? The Conservative route is always going to take you to tax cuts and use that so that the public has got more money to spend. I think the problem is what data is there to actually say whether one of those is going to be successful. I don't think there is, so it is a gamble.
How the world reacts to it is disappointed about the move or have no confidence in British economy. So my impression is negative somehow overall, yeah.
I think it's obvious that there's some sort of recession coming, right, if it's not already here. We just have to work through it. I think arguably you have to keep spending.
I suspect the impact is going to be fairly disastrous. Imports are obviously going to go up in price. Exporting is going to be more difficult. Added to that, the effects of Brexit, which are coming down the line straight for us, and I think we're going to be in serious trouble over the next couple of years.
I've been here 4 weeks, so the change in exchange rate is around about 5%. So I get 5% more. Enables me to buy another pint.
All right, so not everyone disappointed by the plummeting pound. Kai Neufeld is head of forecasting at the Centre for Economics and Business Research in London. Kai, you had predicted a bumpy ride in the markets after this plan was announced. The pound is now flirting with a record low against the dollar. Recent comments by the Bank of England don't seem to be having much of an effect. How serious is what we're seeing?
Yeah, it is certainly quite a serious situation for the government and the Bank of England. I think, the mini-budget wasn't really that mini at all. It was one of the biggest fiscal events in recent history, really. And markets haven't taken too kindly on the very large and, predominantly unfunded tax cuts that the Chancellor has announced without any assessment by the independent forecaster, the OBR.
Looking just at this immediate effect, what we've seen today and a bit on Friday as well, what will a weaker pound mean for this economy that's fighting record inflation?
Yeah, it comes at the worst possible time, really, because the pound has already been weakening. The Bank of England was battling really an uphill battle against inflation, against rising yields on gilts. So to have this added pressure now, which is coming from, the policy announcements on Friday, is really the worst of times, because the only thing, that the Bank of England can do and what markets are pricing in already is to raise interest rates by more, go higher, perhaps go in bigger steps. But of course, that will lead to a lot of pain in the economy, that will slow growth, it will make borrowing more expensive, and in particular in the mortgage market is where we see a lot of, danger building up as, people need to spend more and more for their mortgages.
You just mentioned this mini budget. Do you see a coherent government policy here? On the one hand, capping energy prices, driving much of inflation. On the other hand, attempting to crank up economic output.
Yeah, there's really a disconnect between monetary policy and fiscal policy. That's the big dichotomy here. You see that the Bank of England is trying to bring supply and demand back into balance by raising interest rates, by fighting the inflationary peak that we're seeing at the moment. On the other hand, you have, a government that is really, ripping up the fiscal rule book, really, and saying, we need to go for growth. Growth is the only variable, the only indicator really that the Chancellor seems interested in, along with productivity. And this creates, a lot of distortions, and it's really just not a good timing. If they had waited another month for the OBR to do their forecast, I think a lot of the pain could have been avoided.
Does this idea of growing out of inflation make sense?
I mean, to a certain extent, yes. Growth is a silver bullet, if you so like, but how do you get growth? That is the crucial question. So. Growth is why we can, afford to have these high amounts of government debt that, most economies have accumulated during the pandemic, and also now with the energy crisis. We do need growth, and it's also to a certain extent right that the government focuses on growth and does things to improve the supply side of the economy. However, during these times, during the current energy crisis that we have, the inflationary spike, the slide in the pound, this is all not helping the growth outlook in the short term. We do predict, some benefits in the medium to longer term to materialize, but that is going to take, 5, 6, 7 years really to come through. And in the meantime, we do have to deal with that, weaker pound, higher inflation, higher interest rates.
Kai Neufeld at the Centre for Economics and Business Research in London. Thank you very much.
Thank you.